Can you trust people that are looking to raise money, find investors for you? I have these conversations all the time where people are looking to do deals, buy real estate, buy businesses, start their business, and they're looking for brokers or somebody else to just help. So there are some good times that you can make it happen, other times that it doesn't really work. But I really want to focus on when you just simply shouldn't trust people. And to start out, hey, when do you not trust somebody? Well, anytime it's like an international investment firm. Hey, we're gonna have this great white elephant. I can tell you that 99% of the time, these international investment firms are not real. Watch out. When they say, hey, we've got the crown prince of wherever, be careful, run away. Now, most of the time they're saying, okay, we want to get paid something for raising money for you. Or you know what? That's called a commission or a performance fee. And there's a lot of rules and regulations around that. If for anybody in the United States that's looking to do a deal, if somebody is asking for a commission, ask if they are registered with FINRA, the Financial Industry National Regulatory Agency, private organization, but registers all of the investor banks, broker dealers, investment firms. You can find out if any of the groups that are looking to raise capital for you or work with you to bring in capital, if they are registered with FINRA, that means they are licensed and permitted to take commissions. Check them out at the finra.org broker check website. Super important. Next, it does come up, and it's realistic that a due diligence reimbursement is asked for in advance. I can tell you this is where it starts to get pretty dicey, because there are plenty of groups out there that legally and rightfully ask for due diligence for reimbursements. And reimbursements are like legal expenses, CPA accounting expenses, paying for their time, paying for their travel expenses. Oftentimes, these are reimbursable amounts. If you are agreeing to this, make sure that you are verifying references. Have they actually been doing these deals in the past, or are they just making stuff up? Never pay upfront fees for the engagement. That is generally just, hey, you paid, I have a right to keep your money, but I actually don't need to do any services. Do not pay upfront fees for engagements. Now, let's talk about really egregious compensation. When are the times that somebody is asking so much that it doesn't make sense, and it's a great indication that you're dealing with a scam? If you're working with a licensed, registered investment banker or another stock firm that will help raise capital for you, in general, their compensation is somewhere between 3% to 15%. 15% being the absolute max if you're working with a registered firm. That being said, there are certain times that they may build in other expenses and costs that are valid, but it should never accrue to more than 20% of the capital. And I can tell you that 20% is generally egregious in and of itself, but there are some times for startup companies that it's the only way to make it happen. But still, make sure that these firms are registered with FINRA so there actually is oversight. Now, oftentimes people are asking for, give me ownership. I want a piece of the deal. It's actually the same thing as delivering a percentage of money if you're delivering ownership. So you can't do this unless there's actually some rules around this. And just to talk through it real quick for you, there's an exemption from being licensed with FINRA. That does require that they're actually not getting paid to raise the capital, to find investors. Now they can get paid other things like management fees, If they're going to sit on the board of directors, there's fees for time for services, and that makes sense. But they can't get paid a fee to deliver capital. I really want to emphasize that. That's also where they have to have substantial duties. Like I was saying, they're doing something else to help the business beyond just raising the capital. And generally, this substantive duty at least is expected to go 6 months or longer beyond that time period of raising the capital. Super important. There's also a bunch of other requirements, like if they are registered with FINRA or working with an agency that's registered with FINRA, then they have to work through that agency. They can't do outside business unless their broker dealer, their investment banking firm approves it. In general, with these, you're not working with multiple issuers. Issuers meaning some group or company that is seeking investment capital. They're doing this really so that they aren't brokers doing this over and over and over. And finally, there's some statutory disqualifications that if they have, lied to the SEC, if they have felonies going to truthfulness, if a state regulator has issued a cease and desist, that's a final order, meaning you can't fight it. These type of disqualifying events actually is permanent. If somebody has done these things, they are not allowed to raise any capital for you unless they are registered with FINRA. So these are the things to watch out for. So literally just had a conversation with somebody that was introduced to a scammer looking to fund their deal. Super important to watch out for that. And if you have any questions, you're moving forward with your own capital raise, you're looking for investors, make sure that you have experienced, knowledgeable legal counsel behind you. Feel free to reach out anytime. We'd love to help over at Crowdfunding Lawyers. Have a great time and good luck. Be safe.